Right, good afternoon. It is great to be in your company. This is the week ahead on SABC News. As we always do in this hour, we invite our senior journalists and editors of the specialist desks to come through and open up their diaries for you so that we put you ahead of the curve in terms of what the story will do in the next few days. First up is SABC News economics editor Tshepo Mongwai, who joins me now with that. Tshepo, good afternoon. Let's start with you taking us through the impact of President Ramaphosa and the GNU, the ructions we have seen in the last few days, how that has impacted the Rand and the JSE.
Absolutely. Good afternoon to you, Tulis, and the viewers. And of course, I think what was very interesting was the Friday's JSE All-Share Index, how it closed. We closed actually in the red, and this was up against global stocks that were actually rallying. Remember, the China-US trade deal gave global stocks some impetus, but also developments around the geopolitical risks in the Middle East in terms of the Israel-Iran. So when investors looked and observed at all that, there were a little bit of feeling more, there was appetite for risk. But the JSE, however, it was a slightly different story. And basically it's because of the ructions between the President Ramaphosa and the DA that you could actually attribute to the lack of activity on the JSE that we've seen on Friday with the All-Share Index closing almost 0.5% in the red. It will be very interesting to see, if this will continue to weigh on the local bourse. The Rand, on the other hand, it has gained some ground. Remember, it actually was trading above 18 Rand to the US dollar, but we've seen it strengthening to around 17 Rand 77 cent. And that tells you that, of course, there's still a lot of appetite for riskier assets like the Rand and emerging markets like South Africa, and probably we could see some of the players in the market looking past through what we are seeing as the development politically in South Africa.
So before we talk about the gold price and what it's doing, just to complete that point then, Tshepo, now that it seems like the dust is finally settling around that dispute within the government of national unity, what are our expectations in the market? I imagine that the markets will like that very much.
No, absolutely. I think the market is pretty much in favor of the GNU operating and staying intact. And as you pointed out, anything that actually points to the GNU holding, it's seen as the market as positive, and they don't see much risk. If these continue to hold.
All right. Let's turn to the gold price. It's also another indicator, I suppose, of the state of play in as far as economic stability as well as the markets and their understanding of where that stands. It seemed for a while that it was up and away in as far as the gold price is concerned. You are telling us this afternoon that that picture is slightly changing. Tell me a bit more.
Yes, we've seen the gold price. In fact, as you remember, the gold price rallied to around 3,400 an ounce. So we've actually below that psychological level of 3,400. And there are one reason could be because it's a risk on where investors feel like instead of parking their money in gold, which will not necessarily give them a lot of good returns, they would rather go out and put money in equities where, of course, the risk is high, but the returns are much more attractive. And of course, when the dust is settled, that's when investors feel a little bit more optimistic of going out and trying out those risky assets. And I think the reason why gold price is actually slightly down is because of that. But it may be just a temporary thing. We expect that there's still a lot of risk out there, and we could see the gold price going even more higher.
Yeah, so continuing that theme then, Tshepo, tell us about the current risk appetite or risk aversion in the markets at the moment.
Yeah, no, look, it will be interesting to see development in the U.S., and I think that will definitely point to the kind of risk appetite that investors would be having. We still have the trade issues. I mean, you have some of the countries like Spain where we have not seen much development, and of course, with China now, it looks like the U.S. and China, they have a deal, and I think that will actually result in a little bit more risk appetite in the market, because you would know that these are the two largest economies, and any solution in terms of dealing with their differences will actually result in a little bit more optimism and positive sentiment in the global financial markets. So we do expect that going forward, starting with the Asian trade, we could see markets rallying because of those latest developments. But we know there's still a lot of uncertainties out there, and gold will remain pretty much attractive as a safe haven. The dollar as well, we've seen the dollar weakening against some of the major currencies like the British pounds and the euro, but the dollar remains the reserve currency. It's still being used widely, and there are views that perhaps the U.S. would prefer a weaker dollar because that will help the American exports and their manufacturing, which is what Trump is all about.
All right, thank you for that. That's SABC News economics editor Tshepo Mongwai.